Christian Jamison, you are managing partner at Valor Real Estate Partners. Thank you for joining us on BiTV.
It's a pleasure for me to be here, Luc Etienne. Thank you for having me, and I'm delighted to be part of the discussion.
Thank you. Valor Real Estate Partners and QuadReal Property Group have announced the launch of a second joint venture to invest a further 3 billion euros, which follows the launch in 2020 of a first 1 billion euro joint vehicle. What will be the strategy for this new venture?
Thanks, Luc Etienne. Well, perhaps I can start by giving a little bit of background on Valor.
Yes.
We set the business up about 5 years ago to pursue a investment strategy centered around urban logistics. So last mile delivery in high barrier to entry, supply constrained locations around the biggest cities in Europe. And that sort of thesis and that philosophy is very consistent with what we've been doing since inception. So we started life investing with AIG, and then we had another capital partner, and most recently, as you noted in your introduction, we've been investing with QuadReal, part of the British Columbia Investment Management Corp. The second joint venture, which we've just announced now, the 3 billion, which follows the 1 billion we started 1 year ago, well, a little over a year ago now, in November 20 is when we started our first joint venture with them, and then we've bought around 22 investments since then, around 750 million of GAV, and that prompted us to do the continuation or the follow-on JV that we announced today to target an additional 3 billion. In terms of the strategy, it hasn't really changed. It's a value-add strategy, looking at development, repositioning, refurbishments, extensions, vacancy of last mile, urban, infill, industrial and logistics assets around the biggest gateway cities in Europe. Our main markets today are London and Paris. Around 80% of what we've bought since 2016 and for QuadReal as well has been in London and Paris. But we're also active in Manchester, Birmingham in the UK, Lyon in France, okay, and then in Germany, in Berlin is our main focus in Germany, but we've bought in other big five city locations and we'll continue to target assets in those locations. So the strategy for this new JV is really a continuation of this theme, value add investing, targeting kind of mid-teen returns in urban infill logistics gateway cities in Western Europe.
Great. So from what I understand, your appetite for urban logistics has not come to an end over the last year and since the onset of the pandemic. What market fundamentals are you looking to target through this investment strategy?
Thanks, Luc Etienne. No, it hasn't changed. We still see huge potential in this. And really, our strategy, I think of in terms of targeting the supply-demand imbalance that exists. You're talking about a sector where demand is increasing. There was near-term factors throughout COVID, the pandemic, which was basically a shot in the arm for delivery. I mean, lots of people who were not buying exclusively online were forced to buy exclusively online, and I think a lot of that market share gain will prove to be quite sticky. But longer term, there's also real demand drivers. E-commerce, even before the pandemic, was growing very, very strongly. The convenience factor is huge. Urbanization, cities, despite the pandemic, still continue to grow more fast than rural areas. And you know, the smartphone, those sort of spending patterns, the way people consuming things, the shorter and shorter delivery times, the sort of ultra last mile, as we put it, the gorillas, the Gettys, also the food sector, the restaurants, Just Eat, you know, Uber Eats, you know, getting food delivered to you directly, you know, as and when you're hungry, almost on a sort of daily basis. All these sort of evolving consumer patterns feed into urban logistics. But at the same time, so that's demand side growing, but at the same time, you've got supply reducing because of the pressures of urbanization, and actually warehouses is often the lowest value use of the land. So you've got residential encroaching upon it. You've got major infrastructure improvements, so Crossrail or temporary things like the Olympics and eating up lots of sort of warehousing in the process. Or in the past you had Canary Wharf, the Docklands, the expansion of the city, again eating a lot of the traditional industrial areas of London. I mean, consistently over the last 20 years, industrial land in London has been reducing. And so you've got this supply reduction coupled with demand increases, and that's driving rental growth. And essentially that's the behind our strategy. Those are the market fundamentals we're targeting. And we're really seeing it now come through in the biggest cities in Europe. The rents are really starting to move. It's something that's happened in the US, and we feel it's a very investable trend.
Okay. And you know that Businessimo is based in Paris, so I have to ask, you mentioned Paris, you mentioned Lyon earlier. What role do you see France play in your strategy as you build this last mile logistics portfolio, and how do you see the French market as a logistic market?
We love the French market. Around sort of a third or a bit more than a third of what we've bought so far is in France. Paris is by far the biggest exposure there. It's, as I said, it's over 80% of our French exposure is Paris. We see huge potential in France. I'd say e-commerce, the penetration rates are still a little bit behind what you see in the US and the UK, but I expect that to continue to grow. You've got French planning environment's quite strict. You've got Paris, which is growing. You've got Lyon, which is growing. And, we still see, in terms of the cycle, it being a little bit behind London. And so the really explosive rent growth we've seen in London is only just beginning to emerge in sort of Paris and in Lyon. And we still see loads of runway for France, Paris, Lyon, maybe other markets selectively as we continue to grow. So France, when we started, it was London and Paris only. So France has always been a really big part of what we're doing, and it's going to continue to be so. We have an office in Paris. We have people on the ground. And yeah, we've been really pleased with the performance of the investments we've made in France. Really strong occupational demand, as well as very strong sort of total returns. When we've recycled capital out of those assets, they've performed extremely strongly. So yeah, France is important and will continue to be so for us.
Great. Well, Christian, Jamison, thank you very much for your time and for your insight. And thank you all for joining us. See you soon on BiTV.
Thank you very much. Thank you, everyone.